Happy Monday, everyone. I hope you managed to earn at least enough for some ice cream over the weekend, but if not, we'll try again tomorrow. Tomorrow evening around 5:30 p.m. Dubai time, I'll be doing a live stream for a couple of hours. We'll test different fun Deegan-style strategies and trade on two accounts, one with $1,000 and one with $100,000. We'll set some risk parameters and just hang out. So yeah, tomorrow's stream will be awesome. And if you want me to cover something specific, drop it in the comments. I'll keep it in mind while preparing. Though the title of today's video might trigger some people, Bitcoin dumping to $67,000? A lot of people freaked out during this recent drop and started claiming Bitcoin is headed to $67 squad eyes. Some even say $26 or $29 squad eye, and they explain it with their own reasoning. I get why they think that. But over the last couple of days, a very important piece of news came out, something that actually does have significant weight in predicting where the market goes next. We'll break all of that down today. Let's go. If we look at Bitcoin right now, honestly, it already bounced back pretty nicely. We're back in the same accumulation range I talked about earlier. And honestly, I didn't buy anything because I really wanted to see $100 first. Yeah, trying to time the perfect entry makes you miss trades. So, no ice cream for me either. But the good news is we're back in the same range again. And like I said in the previous video, this could be happening because the market is expecting a rate cut from the Fed in October. Looks like that's exactly what's happening. Plus, that recent news headline added some extra fuel. Ethereum also dipped below the level I mentioned, retested it, and bounced back above. Technical levels work insanely well sometimes. Not always, but when they do, they look perfect. And yes, you can trade these levels if you're willing to spend the time. Tomorrow on stream we'll talk about different strategies a bit more Deegan style because doing a fully serious session in a couple hours is hard. But we'll have fun. Anyway, ETH is also moving back into the same range. That's good. All we need now is to stay above this level, hold it as support, and they'll look fine. Before I explain what I personally expect next from the market, I want to mention something. My ETH orders, the ones I showed earlier, 3,590 and 3,000. 300 the price missed my first order by 80 bucks. It happens. Alright, let's talk news. Here's why people got scared and why the market dumped. One of the reasons was this headline: Japan is ready to raise its rates if the economy meets forecasts. And I think those forecasts are going to be well negative. Japan might jam a stick into America's bicycle wheel again and things might get messy. And then of course, as always, when Bitcoin dips, Bitcoin is dead. When Bitcoin pumps, Bitcoin to the moon. Classic retail mentality. That's why I personally like looking for long entries when there's fear in the market, when influencers scream, "It's over." It doesn't always work, but that's when I start paying attention. Now, about James Wynn, he's a good friend. I've known him for a long time. I've been trying to get him to help promote EVC, but he wants way too much money for that. Like insane amounts. Anyway, he says Bitcoin is going to drop to $67.75 count here. But James has been wrong many times before, as much as I respect him. But still, he's calling for $67,000 on Bitcoin. Next, we've got Andriuka. Andriuka said $26 K. I honestly don't know what he even has to do with trading. To me, it feels like he's just trying to farm views and attention. And clearly he succeeded, since I'm even talking about him right now. But still, he's saying Bitcoin is going to $26,000. And it seems to me that a huge number of people again, I repeat, whenever some narrative or fear appears in the market, they use it to fuel their own social media. Or they're just a bit like hamsters. The moment something scary happens, they immediately start burying everything. But there's another piece of news. And honestly, I understand why all this is happening. I've also talked a lot about negative things that can strongly impact the market in the short term. That same Japan situation, and many other things I mentioned in previous videos. If you haven't watched the previous video, I recommend you go watch it. And also, please subscribe, because damn our videos get more views than we have subscribers. Which means you're not subscribing, then you miss new videos, and then you go complain in the comments that something was unclear. So subscribe, leave a comment. You can even just write, Thomas the Ice Cream Man. Seriously, just for the algorithm, because the more comments and likes, the more views the video gets. We're trying to make good content. Alright, moving on. Here is probably the most important news that you need to evaluate objectively and understand what will actually move the market further. Because today, yes, there's technical analysis, fear indexes, levels, on-chain data, institutional accumulation, a huge amount of factors and indicators. But there is one most important thing that, in principle, has always driven markets since forever. And that is liquidity. That is the money in the market. So where does the money in America usually come from? That's, let's say, the Fed, the Federal Reserve. And Wall Street now, and why, by the way, we also went up a little. Now it's because Wall Street is pushing back the deadlines for ending the Fed's balance sheet runoff program. Basically, in response to COVID in 20,212,022, the Fed started stimulating the economy very heavily. And because of that, inflation grew. And then in 2022, they cut all of this off and instead began selling assets from the Fed's balance sheet, meaning they stopped aggressively printing money and stimulating the economy. And as I've been saying for a long time, this is probably the most important cycle, the so-called liquidity cycle, because once they finish this runoff program, meaning selling assets and draining liquidity from the market, when they instead begin buying and stimulating the economy and, for example, printing money again, possibly in response to the Japanese, because if the Japanese start selling long-term bonds, that's very bad for America. The only way to fight this is to print money and thus devalue the dollar further, which ends up creating inflation again. And the same hell cycle continues the hell cycle of fiat currency. That's why Bitcoin in principle is the answer to all this shit. Well, gold too. But Bitcoin is our digital gold. And right now, the Fed and more Wall Street strategists now expect that the Federal Reserve will end the reduction of its huge securities portfolio earlier than previously expected, after Chairman Jerome Powell hinted that this process could end in the coming months. Of course, the end of this process and the beginning of a stimulus program are not the same thing. Meaning they can finish this process, wait for some big correction or some fear in the market, and then respond to that by stimulating the economy. And then we will finally see a big move. That's when we could see Bitcoin at 150k, at 170k, the altcoin season, and some kind of market top day. And this kind of spectacular finale of the bull cycle. And a huge number of analysts right now are saying that they've moved their forecast from the end of the first quarter of 2026 to the end of this year. Basically, this year Powell will, first of all, cut rates more aggressively and, second, finally stop the selling from that giant Fed portfolio. And this is what it will look like. I think the Federal Reserve will slow down the selling from its portfolio very sharply. And at one moment, just like it was here during COVID, everything will start going up. They'll begin stimulating the economy and pouring money into the market. And that's exactly why crypto also took off back then. And this is what we're waiting for now. This is what, honestly, I've been waiting for seriously already for 2 years. Really, 2 full years. They've been dragging this out. And I'm a bit upset about how long they're dragging it, but maybe we should have expected it. So this is exactly what will actually give us the growth we've always wanted and waited for. The biggest question for that final explosive move is, when will they start stimulating? Not when they finish selling and draining liquidity, but when they start pouring it back into the market. So there are many opinions, but the balance is likely, incredibly likely, to stay stable for some time, meaning they won't be buying or selling. But a tense end of the year can change that. A tense end of the year means Japan, the dollar problem, possibly long-term bonds, economic uncertainty, and so on. All of that may force the Fed to consider resuming active purchases of treasury bills, etc. In short, economic stimulus already in 2026. When in 2026, early 2026, I think it will still happen as a response to some sort of mini-crisis. That's usually how it works. It's hard to make them stimulate anything, because it always leads to inflation again. It breaks the system again, and we go into that terrible repeating cycle. That's simply the nature of government currencies, they're garbage. And it has always been the same since forever. So based on those expectations, that's basically why the market is rising here. And I think that approaching the rate cut in October, it would be great for Bitcoin. Again, I'll say, I don't see let's switch to the daily. I don't see how we can reach my target of 150,000, 170,000 without economic stimulus. Honestly, I don't know. Even if we get here, retest this level, maybe go a little higher, then something happens again, some news again, something. And I think as soon as they start stimulating the economy, or at least firmly stop selling their portfolio, maybe then we'll see a more aggressive move. Because if you look at gold, if you look at the M2 money supply in theory, we still have room to grow. Same story with Ethereum. In general, it wouldn't be bad to at least see a move up here to retest the ETH, and basically range somewhere there theoretically until we see real, powerful economic stimulation. Of course, in the moment everything will depend on a billion other factors. But what I'm trying to say here is that I don't see the end coming, especially with this news that they're about to finally start doing what we've already been waiting for a year and a half. I don't see Bitcoin dropping, like going down to 90,000, well, let's say 80, maybe somewhere in that zone. But even that would be absolutely brutal in the current situation. So sure, anything is possible. But I believe that even if Bitcoin dipped a little and something happened, and everyone got wiped out, which was not exactly predictable, but an understandable event, just massive manipulation, so big guys can money-galize, that does not mean we must now fall, like Tate says, to $26,000. So don't be afraid of drawdowns. You should actually use them to your advantage. And let me remind you, you can watch this video if you want to see all my trades, specifically futures trades. This is not a full trading club. This is not our financial academy. If you're interested in those products and tools, everything is in the description. IPO, DeFi, passive income, a big team works on all of this. Here, you can simply get access to my Telegram, where I post my futures trades, that's it. But it's still useful because our P&L is great, and I've been showing it publicly for half a year. I think I might be the only person who actually shows P&L for half a year or more and posts all trades publicly. So check the instructions and, as they say, always hope for the best. But prepare for the worst. See you in the next video.